Okay, for the third question, which is P1019, consolidated statement of cash flow. So Trapper Company holds 80% ownership of Aero Company. The consolidated balance sheet as of December 31st, 2003 and 2004 are as follow. Okay, so again, we are given the comparative balance sheet and then the consolidated income statement. So Trapper acquired its investment in Aero on January 1st, 2002 for 176,000. At that date, the fair value of the NCI was 44,000 and Aero reported net asset of 150,000. A total of 40,000 of the differential was assigned to goodwill. The remainder of the differential was assigned to equipment with a remaining life of 20 years from the date of combination. So Trapper sold 100,000 bonds on December 31st, 2004 to assist in generating additional funds. Aero reported net income of 35,000 for 2004 and paid dividends of 15,000. Trapper reported 2004 equity method net income of 80,000 and then paid dividends of 25,000. So again, we are doing only the B part, which is the consolidated statement of cash flow. Again, we will start with the operating activities. Okay, so we calculate first the increase in current asset and current liabilities. In this question, again, the current asset is only the accounts receivable and inventory. So we see that accounts receivable is decreased, okay, by 35,000. Yeah, and then inventory increased by 50,000. And then we see that the current liabilities is only the accounts payable and interest payable. Okay, so accounts payable increased by 22,000. Meanwhile, the interest payable decreased by 15,000. Okay, so after we have calculated the increase or decrease, we can directly go to the cash flow from operating activities. So the consolidated net income again is from here, the consolidated income statement, okay, 79,000. And then adjustment to reconcile consolidated net income to net cash provided by operating activities. Okay, the first one is depreciation expense. We add it back, okay, 45,000. And then loss, okay, loss you also add it back, okay, loss on sale of land, okay. And then the goodwill impairment loss, okay. So for goodwill impairment loss, again, it is not a cash expense, okay. It is just the way how the management value the goodwill carrying value, okay. So we need to add it back, okay, we need to add it back. And then for the bonds premium, okay, so it is decreased, okay, by 2,000. So actually from the week 9, okay, we know that premium will decrease the interest expense, okay. Meanwhile, for the cash, the amount will stay the same, okay. So because the income statement record less interest expense, meanwhile the less interest expense than the cash that we have paid it out, okay, that's why we need to put another minus 2,000 to make it into the cash basis, okay. So because in interest expense less 2,000, we need to change it into the cash basis by minus 2,000, okay, so that it will be the same with the cash that has been paid to the purchaser of the bonds, okay. So that's why the amortization of the bonds premium is minus 2,000, okay. If it is a discount, then you add it back, okay, because for discount the interest expense is more than the cash that has been paid, so you need to add it back. Meanwhile, for the premium, you need to minus it, okay. And then we can directly go to the current asset, okay. We have determined the current asset is decreased, so decrease, it means positive, okay. And then for inventory is increased, so it means that it is a negative. And then for the accounts payable is an increase, so it's a positive also. And then for the interest payable is a decrease, that's why you put it minus, okay. And then you sum all of this, you will get 67,000. You add it with the consolidated net income, so the net cash flow provided by operating activities is 146,000, okay. And then we go to the cash flow from operating activities. So again, I think there is no data that state about the investing activities, so we just directly go to the income balance sheet. So the land we see that is decreased by 30,000. Okay, and then we have also the loss on sale of land. Okay, so because the book value decreased by 30,000, okay, it means that you should get 30,000. Okay, but we have the loss on sale of land 20,000. Okay, so that 30,000 you must minus with 20,000 because actually you only sell for 10,000. Okay, so that's why here is 10,000 not 30,000. Okay, because when we sell it there's a loss. Okay, jadi ketika kita jual 30,000, ternyata kita rugi 20,000, makanya jadi tinggal 10,000 yang kita terima. Okay, so that's the way how to calculate the sale of land. Okay, and then we have the purchase of buildings and equipment. So it's increased by 130,000. So you just directly purchase of new equipment minus 130,000. So net cash flow provided by investing activities is minus 120,000. And then we can go to the financing activities. Okay, so basically it has provided here. Okay, Trapper sold 100,000 bonds. Okay, so to assist in generating additional funds. Okay, so the purpose you need to read it also. Okay, so to generate additional funds, it means that you receive cash. Okay, so issuance of the bonds or sale of the bonds 100,000 positive. Okay, and then we see that common stock stay the same. Okay, additional paid in capital also, so left the dividends. Okay, so Aero only paid dividends of 15,000. Remember, for subsidiary it only pays to the NCI. Okay, so the NCI percentage is 20% because Trapper only purchased 80%. So 20% of 15,000 it is 3,000. Okay, and then the payment of dividends by Trapper or the parent is the whole 25,000. Remember. Okay, so the net cash flow provided by financing activities is 72,000, and then you sum all of it. Okay, the net cash flow provided by operating activities, investing and financing, you will get net increase in cash of 98,000. And then you put the beginning cash balance of 83,000, and then you sum it with 98, you will get the ending cash balance of 181,000, which is already the same with the cash on December 31st, 2004 inside the consolidated balance sheet.